With the fear of rising interest rates and the current invasion of Ukraine, certainty is hard to come by on Wall Street these days. However, relying on so-called dividend aristocrats is one approach for investors to get more consistent returns. These unique stocks have not only paid dividends for a long period, but have also increased dividends at least once a year for the past 25 years or more. The stocks that we're going to talk about all have a long-term commitment to dividend growth and current dividend yields that are higher than the S&P 500 average. There is no such thing as a sure bet, but dividend metrics like those provide more confidence than you get on Wall Street these days. Hey, welcome to Stock Market Mate. Today we'll talk about the top 5 highest yielding dividend aristocrats for 2022. Before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Understanding the dividend aristocrat. Investopedia defines a dividend aristocrat as a company in the S&P 500 index that not only consistently pays a dividend to shareholders, but annually increases the size of its payout. These rare companies can maintain high dividend yields, and they are typically very stable. They usually have recession-proof products, allowing them to continue making money and paying dividends even when other businesses are struggling. As an investor, we know you want to get your money's worth, so if you're looking into aristocrat stocks to invest in, then we got you covered. If a corporation has raised its dividends continuously for the past 25 years, it is dubbed a dividend aristocrat. Some dividend aristocrats are evaluated based on other parameters, including firm size and liquidity, such as having a market value of more than $3 billion. At any particular time, there are usually less than 100 dividend aristocrats. Only 65 dividend aristocrats were in the Standard & Poor's 500 in 2021. Healthcare, retail, oil and gas, and construction are just a few of the industries where they can be found. But which dividend aristocrats are worth your expenses? To start our list, we have number 5. International Business Machines, or IBM. IBM is a global information technology firm that specializes in software, hardware, and services for companies. With a 5.5% market share in services, IBM is the world's largest IT provider. IBM's software business mostly consists of middleware, which is the software layer that connects applications and devices. Given the modest growth in revenue and a drop in earnings per share, IBM's headline numbers appear to be pretty weak. However, there are indicators that IBM's recovery is gaining traction beneath the surface. Its strategic goal is to establish itself as a leader in artificial intelligence and hybrid cloud solutions. It has made significant investments in these areas, including a $34 billion purchase of Red Hat in 2019. The hybrid cloud, according to IBM, is a $1 trillion market with the greatest potential for future growth. Client adoption of hybrid cloud and AI will be accelerated. This would aid the delivery of innovation and the enhancement of the company's portfolio. Despite its lack of growth in recent years, IBM continues to have significant competitive advantages. It has a leadership position and a scale in the market. They also have a better chance of returning to growth by maintaining such strong positions in their core strategic areas. From a value standpoint, IBM shares appear to be attractive, with a price-to-earnings ratio of 12.3 based on $10.84 EPS from continuing operations in 2022. In addition, the stock has a high current dividend yield of 4.9%. Overall, we estimate total returns at 6.5% per year. Number 4. General Dynamics, or GD. General Dynamics was incorporated in 1952 through the combination of the electric boat company, Canadair, and several others. The company has evolved through time in order to enter new future businesses. The most significant change occurred in the 1990s, when General Dynamics began purchasing technology-oriented businesses. General Dynamics' annual sales are currently approaching $39 billion. The company's revenue stream has been diversified in recent years, and it now no longer relies as much upon the aerospace segment as it used to. General Dynamics had a satisfactory year in 2021, as the coronavirus pandemic and supply chain issues weighed heavily on the global economic growth, and by extension, the aerospace and defense industry. For the fourth quarter, company-wide revenue declined 1.8% to $10.3 billion, while diluted EPS declined 2.9% to $3.39. Once again, the aerospace segment led the way in the fourth quarter, with a strong bounce back from the previous quarter. However, the defense segments collectively delivered revenue and operating earnings for the year that was the highest in the company's history. Due to increased U.S. defense spending and worldwide sales, General Dynamics' top and bottom lines have grown for several years. General Dynamics has established naval and ground platforms that will enable future prime contract wins as well as maintenance and modernization contracts. After 2022, we expect annual profits per share growth of 6% on average until 2027. Number 3. Chevron Corp, or CVX. Chevron Corporation, or CVX, is one of the world's largest and best-known oil companies. It's also one of the most consistent, having raised its dividend for 35 years in a row, with the most recent rise of 6%. Chevron is now a member of the exclusive Dividend Aristocrats, a club of 66 exceptional dividend stocks that have increased their dividends for 25 years or more. There are just 2 energy stocks on the list of Dividend Aristocrats, Chevron and ExxonMobil, and due to Chevron's reliance on high commodity prices for profitability, they've made it to this prestigious list. Chevron's dividend consistency and stability set it apart in the risky energy industry. Like the other integrated supermajors, Chevron engages in upstream oil and gas production, as well as downstream refining businesses. After a challenging time in which oil prices fell from over $100 per share to around $30 per barrel between 2014 and 2016, the industry had recovered until the COVID-19 pandemic, which dramatically lowered energy demand and prices. The pandemic significantly impacted the business. But in 2021, oil prices began to rise, resulting in higher earnings and stock prices for Chevron. Also, Chevron had still maintained and increased its dividend through these difficult years, having recently declared a $1.42 quarterly payment. Chevron is one of the largest publicly traded energy corporations in the world. They stand to benefit tremendously from a rebound in energy prices and a recovery from the pandemic. If you're looking for something stable, then this stock might be your safest bet. Number 2. ExxonMobil Corporation, or XOM. ExxonMobil is one of the largest energy stocks in the world. The coronavirus pandemic badly impacted the world economy, and it caused oil prices to surge. 2020 was a terrible year for ExxonMobil and the whole energy sector, but in 2021, XOM's stock price increased by 48%. ExxonMobil has various competitive advantages, the most notable of which is its enormous scale, which allows it to reduce expenses when times are rough. It also has the financial resources to make significant investments in new growth possibilities. In recent years, the company has spent tens of billions of dollars on capital expenditures to support future growth. To add to this, ExxonMobil's industry-leading balance sheet has an AA credit rating, which allows it to maintain a low cost of capital. ExxonMobil was able to keep increasing its dividend each year by continuing to earn consistent profits. If oil and gas price fall below $45 per barrel, Exxon's dividend increase run may come to an end. The corporation, for one, continues to prioritize the dividend as high priority in its capital allocation strategy. Number 1. ABBV Incorporated, or ABBV. ABBV is a global pharmaceutical giant. It has a market valuation of $258 billion, making it a mega-cap stock. After being spun off from Abbott Laboratories, another dividend aristocrat, ABBV began trading as an independent business in 2013. Since the spin-off, ABBV has experienced rapid growth. From 2013 to 2021, ABBV reported annual revenue and adjusted EPS growth of 14.6% and 19.1%, respectively. ABBV now concentrates on a single business segment. Medicines, immunology, cancer, and women's health are among the primary treatment areas covered. Since being spun off from Abbott, the company has experienced rapid growth. AbbVie's annual revenue has surpassed $50 billion. AbbVie reported its fourth quarter earnings result on February 2nd. Quarterly revenue of $14.9 billion increased 7% year-over-year and was primarily due to growth from some drugs, such as Skyrizi and Rinvoq. Earnings per share increased 13% for the fourth quarter. For the full year, revenue increased 23%, while adjusted EPS increased 20% to $12.70. The company issued strong guidance for 2022, which calls for adjusted EPS in a range of $14 to $14.20. At the midpoint of company guidance, adjusted EPS is expected to increase 11% for 2022. Even with Humira's US patent exclusivity set to expire in 1 year, the company has a plan to continue generating long-term growth. Overall, AbbVie is a high-quality company with a robust pharmaceutical pipeline and significant growth prospects. It's also a shareholder-friendly corporation, with stock buybacks and dividend returning excess cash flow to shareholders. We feel AbbVie is a hold for long-term value and income investors. With predicted returns of 5.9% per year in the future, including a 3.9% dividend, this stock is surely promising. Not all dividend stocks are fruitful investments, and many investors aren't sure how to start their search. With that in mind, we hope this video helped you in your money-making plans. Before choosing any stock, make sure to do your own research. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!